Welcome back, everybody, to the Crypto Traders Podcast. Today, we're going to talk about the best way to accumulate Bitcoin for beginners. Let's dive into it. JOMO, what do you have to say about that?
Hey, CM, this is a very good topic. It's a very interesting and good topic. And I think the answer is quite known, right? It's DCA, dollar cost averaging, right?
Yes. What can you elaborate what it means, dollar cost averaging?
Of course, that's a great question. Dollar cost averaging means that you buy a specific amount, usually should be constant amount, in different time periods over a long period of time, while in the midst, the price changes up and down, and it doesn't matter if it goes up or down. You continue with your accumulation, you continue with the buying at the same date, at the same, let's say, intervals of time, at the same cost, and it will change your average cost. That's why it's called dollar cost averaging, right? Let's say you bought 16, then you bought 20, then you bought at 24, all right? So your dollar cost averaging would be 20, right? Because that's the average of all three buys. And let's say you buy every first of the month. So you buy every 30 days at the first of the month. Now, just to summarize it a little bit again, dollar cost averaging is simply buying at a very constant, not constant prices, not constant amounts at the same interval of times. For example, every first of the month, $2,000, okay? And not changing it. Doesn't matter if prices go up or prices go down. And you need to do that over the long term, okay? For example, a year, 2 years. And I think now, all right, is a very good time to begin. Now, prices might go down from here, they might go up. It doesn't matter because we're still not in that raging bull market. It's a very good time to start accumulating, that $1,500, $2,000, $5,000, doesn't matter what's your capital you want to put that. What do you think, CA?
Yeah, this is a very good strategy. And also, I think it's a very good strategy once there is some kind of local or serious long-term bottom in, okay? That's the best time to start because you don't want a DCA in the beginning of the bear market. This is horrible.
Exactly.
A lot of people done that and they lost all their money. You want a DCA coming out of market bottom or when the price is going sideways or up, okay? Never DCA on the way down. I got wrecked in 2018 doing that. And make sure you DCA only into Bitcoin if you do choose to use this strategy. Bitcoin is the best. It's not going anywhere. And it's the only asset for DCA, in my opinion. Maybe Ethereum too, but today we're focusing on Bitcoin.
Yeah, we're focusing on Bitcoin totally. And you know what? Two things that I should have mentioned, but it's a good thing you're here because you just mentioned them. One is there is a difference between DCAing and averaging down. Okay, averaging down is when you accumulate BTC from the highs all the way down. Okay, now it's a type of DCAing, but it's a wrong type of DCAing. We call that averaging down because you're actually buying all the way to the lows. Okay, now you do want to start DCAing as what you said, right? When we have a very significant local bottom that happened after the FTX collapse and after the bank crisis, we actually went up on very bad news, right? The bad news of the Silicon Valley bank crisis, we actually went up. So that actually means it's called a news gap when you have bad news, but you actually reverse, all right? So that is quite a significant, local bottom or so. Now, doesn't mean that we won't revisit it. Maybe we'll revisit it. Doesn't mean that we will never go lower. We don't have a crystal ball. Maybe it goes lower. But because you started at a good timing, you will dollar cost averaging into that probably temporary weakness. Now, of course, in order to DCA, and CM, correct me if I'm wrong, you want to be more of the optimistic side for BTC, right? We want to make sure we understand if you trust, the long term. or a price action of BTC, right? And if you think that BTC is here to stay, which we do, because BTC is the crypto market, and I believe, I assure you believe as well that crypto is here to stay, so BTC is here to stay. So DCA is a good idea. What do you think about that?
Yeah, absolutely, man. I actually, while we're making this video, we actually bought some, you know, in the 25 for a trade.
Yeah.
And then it pulled back and it stopped me out. But now I think, now that I'm watching the charts, really it's a good time to buy Bitcoin, you know, DCA. And I think I'm gonna start DCAing myself just a little bit, you know, 1% of my capital every month, or maybe 2 or 3%, you know, just to have some, because it looks like a good time to start. You can see you have the low here, then you had, you know, another higher low 60 days after, and then you have possibly another higher low pretty much the same amount of time after. Okay, obviously it can go down, but I'm just saying it looks like it can be a good time to scoop some Bitcoin on these levels, both from DCA perspective and both from swing trade, you know, hodl, midterm hodl mindset also. That's what I think.
Yeah, for sure. For me, a swing trade, I need different type of, you know, look for the chart, but DCA for sure, 100%, I think it's a good idea. Now, one piece of advice, right, CM, we must say that if you are going to DCA, okay, make sure you put the capital that you don't mind that even if it goes down by 50%, okay, you are okay. Let's say you put something that you feel bad when it goes down 50%, that's too much. You need to DCA an amount that even if it goes down 50%, you don't feel bad about. Okay, you don't feel bad about. That's the secret to good DCA, because good DCA can take, you know, a long while. It can take a year, it can take 2 years. You know, sometimes I would say that the longer the better at times, because let's say you DCA for 3 years, then after 3 years the price go 10x, you make a lot of money, right? But of course, in a trading perspective, we don't want to wait that much. I'm not just talking DCA perspective. Yeah, you can show what happened in 2017 if you want to, 19, sorry, to see if, you know, someone DCA'd from that local bottom of the 3,000 to 4,000, he DCA'd for a year, 2 years, then he made triple the money or 10 times the money, depends where he started DCAing. Yeah, perfect.
Yeah, and we're gonna talk about also in the next video about capital, how to allocate capital. So you want to think like buckets. You want to have a DCA bucket. That means capital you allocate for DCA. Okay, then you want to have a trading capital. That capital you use for trades, short-term or long-term or mid-term trades, to gain more tether for you, so you can accumulate more Bitcoin later. Okay, and then you want to have maybe another capital that you just hold in cash, okay, for like, you know, reserves, or for a black swan or great opportunities or whatever. We're gonna discuss this topic in the next episode, so make sure to subscribe to this channel, like the video, leave a comment if you want us to cover any other topic. And if you want to join, really, part of your trading capital, you should, if you're brand new to crypto, you should subscribe to some people that give trading advices and trades alerts like we do. So if you want to join JOMO trading group, just click on the link in the description in the first comment, okay? And really join JOMO trading group today. It's only 19 bucks. You get all the trade alerts, market updates, anything you need. This is the time you want to join, because we are in an early bull market for Bitcoin and crypto, and just a matter of time till the altcoin will start raging and you can accumulate more tether and grow your account substantially faster than just DCAing into BTC. All right, guys. So thank you very much for watching. See you in the next episode. Cheers.
Cheers, everybody. Stay tight.